Now let's move on to how to trade those market maker models. Before we do that, let's remind ourselves of the time frame alignment, right? Those PD arrays on the different time frames. So from a monthly array into a daily market maker model, from a weekly array into a 4-hour market maker model, daily array to a 1-hour market maker model, and so on and so on. So price is fractal, right? So we can scout for setups using different arrays and different market maker models. Right, so over here we got a crude depiction of how it looks like on a chart, right? We outline our premium to discount levels and scout out where the original consolidation has formed, right? We've got on the lower end of this discount, we've got that original consolidation, hourly structure, right? Moving up, accumulation phase number 1, let me repeat that. So we've got this original consolidation down in discount over here. So we know this is going into buy side of the curve. Hourly structure on a market maker sell model. We've got that accumulation phase number 1, accumulation phase number 2, until we hit that daily premium array, right? We're going from a daily into a 1-hour market maker model. So price goes up into the daily premium array. We wait for that 1-hour stop hunt, and from here on out we can scout for an opportunity into a market maker sell model. In this piece of price action down here, we can see this is a bigger market maker sell model, but price is fractal, right? So on this 1-hour stop hunt, we can see a 5 minutes. On a 5-minute structure, we can see a 5-minute market maker sell model form. And this is our opportunity to get in on a trade. So a sell program up here is activated. Up close candle should support price lower, and bearish PD arrays should be respected, right? Going into sell side of the curve and then eventually liquidating this original consolidation. Now how does that look like on a candlestick chart? We've got E-mini S&P 500 futures over here, daily chart, right? So remember, we're going from daily PD arrays and daily external range to internal range into a 1-hour structure, and looking for our market maker models over there. So over here we got these buy stops run, right? Let's go to a 1-hour time frame. Over here we got that run on stops on the buy side liquidity on the daily chart, right? Now we identify on the 1-hour where is the original consolidation, right? Down here we've got this nice original consolidation. Price expands up higher, 2 accumulation phases, and then eventually liquidating that high, and now we can scout for a market maker sell model, right? And all up close candles, which are bearish order blocks, should be respected on the way down, and also those bearish arrays, right, like fair value gaps. Zooming in a little bit more, we've got that accumulation phase 1, accumulation phase 2, and then external range liquidity up here has been taken, right? So break in market structure over here, and then price retraces back up, and this is an opportunity to look for a market maker sell model. We've got that breakaway gap up here, and remember from core concepts, right, we've got that new PD array, that redelivered rebalanced gap over here. Price has no business going into that breakaway gap, and it should form a sell side of the curve down here. If you go to the 5-minute time frame, we can see a market maker sell model form here, so we can zoom in a little bit more. Right over here we've got that 5-minute time frame, right? Remember, we're going from a daily external range liquidity rate into 1-hour structure, and eventually once we hit sell side of the curve on the 1-hour, we can scout for a 1-hour PD array, which in this case is that redelivered rebalance gap, right? And then on the 5-minute time frame we can scale in down even more and look for a more precise entry. So over here we got that original consolidation with sell side liquidity, right? Also equal lows. So very nice target for sell side. Accumulation phase 1, accumulation phase 2, buy side of the curve. Once we hit that PD array up here, then we can go into sell side of the curve, and now every up close candle should resist price to go lower. Always match up your entry with the correct kill zones, right? London kill zone 2 AM to 5 AM, or New York kill zone, or London close kill zone. And if you trade indices, go with AM session and PM session, right? So in the correct kill zone. So time is in your favor, and we can see that over here it hits it in the kill zone, that higher time frame PD array, and from here on out we should see bearish arrays being respected. So sell side of the curve, right? Again, use those mitigation blocks, right, from the previous lesson. We've got this bullish order block over here. We can extend it out in time to the sell side of the curve. Now, is there a PD array formed inside this mitigation block? Yes, we do have a volume imbalance over here, right? And then a bearish order block being formed also. So this is a nice area to take a short from. It's lining up with that mitigation block from the buy side of the curve into sell side of the curve. And eventually we've got the same thing happening over here, right? That bearish candle over here is a bullish order block. It's being traded in through. Now it's becoming a breaker block, right? Because a breaker block is structure liquidated to the upside and then breaking structure lower. Then we have a bearish breaker block, which you can extend out in time. And over here, as you can see, it hits it and then continues to liquidate this low. So market maker sell model completed all the way from the daily, right? External range again, going into a 1 hour structure. You look for that PD array on the sell side of the curve on the 1 hour and zoom in even more on the 5-minute to find that fractal market maker sell model. Right over here we've got US dollar Swiss franc weekly chart. Take a look at this chart and where are we most likely to draw into. So at first we take external range liquidity, right? So now where does your attention go into for your drawn liquidity? Right over here we've got this area, redelivered, rebalanced, little tiny fair value gap. So the drawn liquidity is from external to internal, and we're zooming in on a 4-hour chart. Now with this being messy, if we drop down into the lower time frames and scout our structure, we can still manage to navigate through all this consolidation on the 4-hour, right? So we know external range has been taken on the higher time frame, also on the 4-hour. Remember, this order pairing happened down over here below an old low. We know we go from external to internal, right? The drawn liquidity is up here. Where's the original consolidation? It's up here. So we've got a market maker buy model forming. Now we need to take external range and have a smart money reversal, which is down here, right? Market structure shift up here, breaking structure after liquidating the lows. Very important. We need to take external range and then drawn liquidity on that original consolidation with internal range on the daily time frame. 4-hour fair value gap is being respected. Candles are respecting the CE of this fair value gap, so the 50% level, right? And then this retracement is a market maker buy model on a 15-minute time frame. So now we're on a 4-hour, right? We went from a daily external range and now our drawn liquidity is the internal range. We can see this market maker buy model form on a 4-hour and break of structure and a higher time frame POI. So let's zoom into the 15-minute. Right, we're on a 15-minute chart, right? We have another original consolidation inside this 4-hour structure, right? So think about it. Price is fractal, so this happens on all time frames. You can even dive into a 1 minute after this one and find a market maker buy model or a short-term market maker sell model even. So down here we got this consolidation, accumulation phase 1 and 2. This retracement is a market maker buy model, right? We liquidate this low again, short-term order pairing over here for those sell stops. Break of structure up here. What are we leaving up here? Right? Engineered liquidity. Price drops down back into that 15-minute order block. 15-minute fair value gap. Right? And then draw out your premium and discount level from this low. We liquidate this low, dealing range low. We take out this buy side liquidity. That high over here is our dealing range high. So we have our premium levels and our discount levels. Then this fair value gap is a discount array, and you can see price liquidates this one. And again, this is a high resistance liquidity run, right? Because we just take out this low and then reject immediately. So order flow is bullish. And then we've got another breakaway gap. Why? Because we have that PD array, right? That redelivered, rebalanced PD array, which is a balanced price range. So we have two opportunities to get in on this market maker buy model, and let's see how that looks like with the New York midnight open price. So on this day, this is a Monday. If you extend this New York midnight price over here all the way in time, we can see London session highly likely to create low of the day, right? So dropping below New York midnight opening price, we know after we create low of the day, we want to see displacement and a fair value gap or an order block being formed where we can base our trade off. So this was a good first entry to take because the drawn liquidity is still up in this original consolidation, right? So until we liquidate this original consolidation, we can still find entries multiple times. So over here, first entry was possible. On a Tuesday, there was another entry possible, right? Draw out your midnight opening price, 12 a.m. EST, and then that redelivered rebalanced PD array is over here, creating this breakaway gap, and then drawn liquidity was still not reached, right? Remember, and on a 4-hour time frame, that original consolidation is even higher. So the potential to go higher and higher on this chart is very likely, and we can see we just use those discount arrays, and then second opportunity on a Tuesday arrives, and then eventually liquidates that market maker buy model. So how to trade the 1-minute chart and 1-minute market maker models. The 1-minute chart is based off the 15-minute structure and PD arrays, right? So remember about time frame alignments from monthly to daily structure and so on and so on. And now we go from that 15-minute PD array into a 1-minute market maker model. Right, so we got USD Swiss franc again, right? Same chart. And now we can dive into even a lower time frame to scout where we can get in. And we know this is a 15-minute market maker buy model, right? But from here to here, this retracement is a form of a market maker buy model, right? Because we're hitting a higher time frame PD array, and the higher time frame in this case is a 15-minute time frame. It's all fractal, so if we dive into the 1 minute, then the 15-minute is a higher time frame, right? If we go and dive into in a 1-hour chart, that's the higher time frame for a 15-minute market maker buy model, and so on. So again, this retracement down here, that will be a 1-minute market maker buy model, right? We're dropping below New York midnight open price, so everything is lining up. Higher time frame is lining up, and now we dive into the 1 minute to scout for our setup. Right, so buy side liquidity above here, right? Market maker buy model, original consolidation. This is that retracement on the 15-minute, right? And then we got that 15-minute fair value gap, which is the higher time frame PD array to take our trades from. So going into sell side of the curve here, right? Smart money reversal, respecting this little fair value gap, right? Continuing buy side of the curve until we complete this market maker buy model on the 1-minute time frame. Outlining those phases, right? Original consolidation, accumulation phase 1, accumulation phase 2, and then eventually smart money reversal is down here. Smart money reversal needs to happen in a higher time frame PD array. It cannot happen anywhere. So if you think this is like a smart money reversal, but we didn't hit any higher time frame PD array yet, right? The CE is down here, and then actually we're leaving out these engineered liquidity up here, which is a failure swing, unequal highs. It's perfect draw liquidity for buy side of the curve. Market structure shift over here, also one down here, but this is a significant break in structure. So where do we get in? We've got this breaker block, right? This mitigation block over here. Now, do we form a PD array on this breaker block? Yes, we do have that bullish order block up here, right? And then price finds support up here and continue up higher. Again, outlining those mitigation blocks. Remember, right? Those bearish order blocks, extend them out in time. Now we've got that mitigation block for a new fresh PD array for the buy side of the curve. So we create another fair value gap, this displacement up here, co-inlined with that mitigation block, making it high probable it will hold, and then completing the market maker buy model over here. And what is most important too, time, right? So be in a kill zone to look for your setup. So New York kill zone starts over here, 7 a.m., right? And this part is in the kill zone. So we formed that smart money reversal just before the kill zone, and we want to look for entries inside the kill zone. Right, so we got a higher time frame chart over here, Euro USD. We start off with the monthly. We've got that internal range liquidity, right? Higher time frame PY. So remember, time frame alignment, monthly chart, PD arrays into the daily structure, right? So let's go to the daily. So on the daily, we hit that monthly fair value gap, right? We have a market structure shift down here. So we're going into sell side of the curve. So now we know bearish order flow on the daily time frame. It makes sense because we got that time frame alignment, right? We have that higher time frame PY in the monthly fair value gap. So it makes sense for the daily structure to shift. Where is our opportunity? We've got this sell side liquidity down here, and we form a displacement in the form of a fair value gap here. So opportunities lie inside this fair value gap to go down into this sell side liquidity. So if we use that daily PD array, what kind of structure do we need to use? Right, 1 hour structure, right? So from this high until this low, we can find our potential market maker sell model forming, and the daily order flow is in line with this idea. And the market maker sell model on the 1 hour is completed once we liquidate this low and eventually take out this one on the daily time frame. So diving into that 1 hour time frame, remember we've got that daily fair value gap right up here. So before we want to go into sell side of the curve, we need to hit this higher time frame PD array. Original consolidation down here, right? Accumulation phase 1 and 2, and then hitting that key level, making a smart money reversal. So over here, this is important. We need a key level to key off and go into sell side of the curve from there, and then we can dive in even deeper in the 5-minute chart later to find a more precise entry. But over here, how to trade this 1 hour time frame? What do we form, right? We take out buy side liquidity up here and then start to break structure lower. So this bearish candle becomes a breaker, right? So and then in this breaker, there's your opportunity to go into a sell. We know we don't have to go up here anymore. We know sell side of the curve is confirmed, and we should not disrespect bearish arrays anymore. And then continuation until we liquidate this one. So this whole row of up close candles is a bearish order block, right? So price should offer support to go lower. Same case over here. All these up close candles over here is all a bearish order block, and you can see price drops below it, goes back one more time to go into that bearish order block, and then finish off that market maker sell model on the 1 hour. Now we can dive into a 5-minute time frame too. So on the 1 hour you could have gotten in with a breaker, right? So entry on the breaker, stop loss above the breaker, and then continuation lower. But if you dive into the 5-minute time frame, we have this piece of price action over here, which could be a market maker sell model being formed, right? Because we take this external range up here, and then we have that fair value gap being fully filled in. So that makes sense to continue down lower. So if we dive into the 5-minute time frame, so we're going all the way from the monthly, right, into daily structure, and we know our daily structure was bearish. We had that fair value gap where we could base our trade off from on the 1 hour chart, and now we dive even deeper down in the 5-minute chart to go and find a market maker sell model. So again, every time we need to scout this market maker sell model original consolidation, right? So original consolidation is down here, sell side liquidity is resting below this, and see all these failure swings, right? So we have engineered liquidity around this area. Price moves up and up and up, leaves engineered liquidity behind once again, drops back down, and retracement to continue up and fill up this whole 1 hour fair value gap and taking out all this engineered liquidity up here, all these buy stops. So from here on out, it's a high probability key level where we can go into sell side of the curve, and all up close candles should support price to trade down lower, right? So we have this bearish order block here, price drops, displaces too, so making it even higher probable after this break of structure that this bearish order block will hold. Again, with these two up close candles, they keep supporting price to turn down lower. And then over here another array has been formed, right? This bearish fair value gap continuing down lower, little consolidation and expansion, and then finally completing that 5-minute market maker sell model.